Well, the Republican Party appreciating gold because last week they officially endorsed a commission to study the idea of a return to the gold standard. Now, it's highly unlikely that the United States would actually return to the gold standard. The country first moved away from the gold standard in 1933 and then dropped it altogether in 1971. But there is talk that perhaps the government should opt to have just 15% of the money supply redeemable for gold at any given time. Well, joining me to discuss this and the continued strength in gold prices are Peter Grant, Senior Metals Analyst and an account executive with USAGold, and he's joining us live from Denver, Colorado, and Jordan Roy-Byrne, Chartered Market Technician and the publisher of the Daily Gold Premium, who's joining us live from Seattle. Gentlemen, thanks for being with us this evening. Well, let's begin. What do you think, and I'll direct this to you, Peter, first, what do you think of the idea of having some kind of peg to the gold standard?
You know, I think we're probably heading in that direction. I'm sort of with you in that I don't really believe that we'll move back to the traditional gold standard that perhaps most of us are sort of familiar with. You know, when you're a country that's $16 trillion in debt, officially, and quite honestly, it's significantly higher than that when you take some other things into consideration, unfunded mandates and the like. To go back to a traditional gold standard where the dollar is redeemable for gold on demand, we would see our gold reserves depleted in very short order, I think. So I think that the Republican Party taking up the idea of the gold standard does a couple of things. It was, I think, a bone, if you will, thrown to Ron Paul and his delegates. But I also think that it really kind of brings the conversation to a new level. And as you said, I think that there's unquestionably a trend, particularly in the emerging markets, where countries are building their gold reserves in anticipation of gold kind of reassuming some significant role in the monetary system.
All right, thanks, Pete. I'm going to let Jordan weigh in on this idea. I mean, is it even feasible given the USA's $16 trillion debt and the fact that there's only enough dug up gold to fill up just over 3.5 Olympic-sized swimming pools? So, Jordan, A, do you support this notion? And B, even if you support some of it, is it even feasible?
Well, I don't know if it's feasible. I mean, that's really a whole nother discussion that would take up too much time for us here today. I would echo a lot of the comments that Peter made. First, I'll just say if you go back to the last two bull markets in gold, there in the 30s and also in the 70s, they did end with a change in the monetary system. So this gold bull market, which I expect to end, sometime in the next 5 to 8 years or so, it's probably going to end with some change in the monetary and currency system. And so I do expect gold is going to play a role. How big of a role and what role specifically, I don't know. That's too hard to say. And lastly, I would agree with Peter that I do think Republicans are not entirely serious. I think it's mostly a political move that they're doing to try and bring in those who support Ron Paul. I would definitely agree. I think it's meat for the libertarians and the Ron Paul fans out there in hopes that they will vote for Mitt Romney.